guys, Evans here. So in this video, we'll dive into the tech analysis on the Pocket Option platform, and I'll show you how to work without indicators using only the chart and basic platform tools. So if you're a beginner, it might seem like the market is kind of a crazy, chaotic casino, but actually the market is based on logic and repeating patterns. If you learn to see price movements, levels, trends, you can understand where the market is heading and where to open trades. So today, we'll review several trades in the quick trading mode, and I'll show you how to use it in practice. The main point is everything will be done without complicated indicators, just clean chart work. Candles, lines, support, and resistance levels. I'll show you how to identify support and resistance levels, how to see the trend and impulses, how to use this knowledge to enter a trade across different time frames, and how to manage your risks. So what are support and resistance levels? I want to start with them. So a support level is the price at which the asset more often stops during a decline. When the price approaches the support, buyers start entering actively and the price bounces back up. So simply put, it's the floor holding the price from falling further down. So let's look at this. On the minute chart, you can see that the support is somewhere around here. We will draw a horizontal line slightly below, but we roughly can see where the price was reversing. So basically when the price drops to these levels, you can open a buy trend expecting the price to go up. You can already open a position because we've set the line slightly below, but today I plan to work with another currency pair, just showing you this as an example. Next up, we'll talk about the resistance level. It's basically the opposite of the support level. It's a level where the price usually stops during an uptrend. So when the price approaches resistance, sellers start selling. So we can say that the resistance level right here is, I'll just put my horizontal line. Yeah, so the resistance on this chart was here. When it reached this high, the price then fell. Slight correction right here, but essentially the resistance level is here on the 1 minute time frame. On the chart, you can mark these levels with horizontal lines across different time frames, depending on what time frame you're trading. So this just helps where the market might reverse or continue, which is very important. So don't rush, draw these lines, see the overall picture, and then make an informed decision. Next up, we'll talk a little bit about the interface. So over here, we can choose the currency pair. Over to the right is the time frames. Also, you can select the chart type, but we mainly use candles because they're more informative. Also, there are drawing tools like horizontal lines that we already use, trend lines, and others that you can experiment with. But right now, you work with a clean chart. Okay, so next up, let's proceed to open our first order. Let's pick a currency pair. I suggest the Swiss franc and Japanese yen. Let's first up look at the hour time frame to assess the whole picture. So if you can see, after a little decline right here, there's an uptrend, several candles in a row, like a little breakout. Yeah, there's a big candle here. There was a downtrend, but overall, it's looking like an uptrend right here. Let's check the impulse, maybe on a 15-second chart. As you can see, there's a trend upward. Some candles went slightly down, but the trend is overall bullish. Okay, so we'll place a trade on the minute time frame. We can still see the trend going upwards. Let's draw a resistance level. So when the price reached this level, it sharply dropped back. We'll also mark the lowest level right now. So this is where the price touched and even went slightly below this level. I think I'll open a buy here. I'll go for a 1 minute expiry at amount of $100. But you have to work with around 2-3% of your deposit. Remember that. So I opened the trade. Let's wait and watch how the chart behaves. So it's important to not do any sudden moves. Let's just wait for a minute. The candle fluctuates a bit, but I think it'll go up. It's starting to go up, and depending on how long the trend continues, that's how long the candle will go up. Once again, the trend confirms itself. Big candles, false corrections with small dips, but the trend is upward. Third candle appears, so I think we'll end in profit. Our timer shows 24 seconds left, sorry about that. So we didn't just click randomly, we drew lines, checked the bigger picture on the hour time frame, examined the impulse on smaller time frames, and only then opened the trade. So a couple seconds left, and it closed in profit. Let's go. So we analyzed carefully and got a successful trade. I think right now we'll pick another pair. Let's try the Euro and Swiss franc. We've already worked with the franc, so we'll just add the Euro right now. Let's first look at the hour time frame to get the overall trend, as we do. You can see there was a huge breakout upwards right here. Sometimes the market slowly goes down and then a break occurs. Yeah, let's mark levels here. Seems like the market will go up to these levels. Let's switch to the minute chart, and yeah, let's open the buy order. Let's wait and see how the situation develops. What does this tell us? So these big candles right here with long wicks indicate an overall uptrend. So sometimes minor dips appear like here, but it's not a correction. It's just a slight pullback, and the trend still remains bullish. I'm not gonna close manually. I'm just gonna wait and keep my position for right now. I've set my amount, so I'm just gonna wait. As you can see, the overall trend is obviously bullish. Yeah, I'm just gonna wait on my position right now. Remember that risk 2-3% of your deposit. There's no need to rush. You actually don't have a reason to, because the only thing you risk is your deposit. And as you can see, we closed profitably again. What else I want to emphasize on is that my goal was to show you that the market analysis doesn't require indicators. So to trade successfully, you just need to analyze charts, candles, levels, and these signals help you identify the right entry points. So it's very, very important that you don't rely on a single time frame. For example, only the hourly time frame and just buy within a minute. It doesn't work like that. So you must do preliminary analysis. I will repeat myself, better to do like 2 or 3 well thought out trades than 20 chaotic moves. Quickly, you'll just blow your deposit, but if you analyze deeply, you'll understand the chart better and start earning steadily. So today we opened 2 trades to show how to apply these skills in practice. In future videos, we'll cover indicators, some liquidity zones, candlestick patterns. We'll dive deeper into all trading nuances. But right now, I just wanted to show you that technical analysis is just a matter of time and understanding of what you're doing. So yeah, I'm glad you watched this video. I'll be happy to see you in future videos. And remember, I'm here to help you trade profitably. So my main message for today, for market analysis, you don't need complex indicators or chaotic actions. Just understand the chart, see levels and trends, and trade calmly step by step. We've opened 2 trades in real time today, so you can see success comes not from luck, but from discipline and system. And if you want to learn more, see my trades live, understand my entry logic, and practice, I share all of this daily in my Telegram channel. There, I show my trading, talk about trader life, and post signals you can follow easily. The link to my Telegram is in the video description, so subscribe and let's keep learning together.